Hello friends, welcome to the Market Message. I'm Bill Valentine, here to make you a better investor. Today I want to talk about the unemployment rate because it's very low right now, and there's a small group of people out there who don't trust the number for the way it's calculated. So before we get into that, let's take a look at where we are on a year-to-date basis through the end of March for the 5 major asset classes. All right, so March was up for bonds, REITs, and commodities, down for stocks. On a year-to-date basis, REITs, Real Estate Investment Trust, down 6.8%, explained largely by the run-up in interest rates. That's also the explanation for why the overall bond return is down 1.9%, since bond prices move inversely with yields. Ultimately, this is a sign that the economy is getting stronger. Commodities are up 2.2%. That's global demand is the easiest way to think of that. Looking at U.S. and foreign stocks, down a bit for the month and on a year-to-date basis, but not terribly so. So we have about a 4.1% unemployment rate in this country. And I will tell you, dating back to the dark ages when I attended the University of Arizona and sat through Jerry Swanson's economics course, that it's always been regarded that 5% unemployment or less is essentially full employment in a country like the United States. In other words, there's always a certain amount of attrition, companies going in and out of business and employees changing jobs, such as to keep some minimum level of unemployment. But at 4.1%, you'd have to say that we're below that 5% threshold. And so arguably, we're fully employed as an economy. And I think that's consistent with the economic picture. Yet, the way that the unemployment rate is calculated is controversial. And some people, I think, are reading the wrong message into how the unemployment rate is calculated now and are making the erroneous suggestion that there's more unemployment than is being captured by the number. So first, let's just take a look at a long-term chart of the unemployment rate. So what you can see here is going back to 1990, that the unemployment rate in the United States has ranged from the very, very high threes in the year 2000. That was the low. The high is around 10% after the Great Recession in 2009, 2010. And you can see right now it's at about 4.1%. So where people take issue with this number is that it's based on the amount of people that are looking for work but can't find a job. We call them the unemployed, relative to something called the civilian labor force. The civilian labor force is not the total number of people in this country. It's the total number of people in this country over 16 that consider themselves or are considered by the government to be part of the labor force. In other words, willing and able to have a job, whether they're employed or not. If you look at this chart here, you're looking at what's called the civilian labor force participation rate going back to 1990. And you can see that in about the year 2000, the participation rate dropped from a number that was sort of high 67% to something now that's around 63%. And one of the explanations for this in some people's mind is that people have left the civilian labor force because they're disgruntled. They're discouraged by the ability to find a job, and therefore by leaving that pool of people, the unemployment rate, which uses this number is in its denominator, is artificially low. I know that's a lot to take on, so I created this chart. It's kind of ugly like a lot of the things I create on Microsoft Paint, but hopefully it'll help you understand sort of where these numbers come from. So this funnel represents the United States, the population of the United States, working all the way down to the unemployed level at bottom. So we have approximately 325 million people in the U.S. Of that, the subset of people aged 16 and older comprise about 256,000. So the first definition of the labor force is that it only includes people over 16. But the true labor force, the civilian labor force, is a subset of all people over 16. In fact, it's 161 million out of the 256 million people over age 16. And you can see to the right an arrow pointing to some bullet points of people that are excluded from the labor force. In other words, of that 256 million people over 16, some people drop out of that group to become our labor force. And who are these? Well, they're the permanently disabled. The permanently disabled are not included as part of the labor force calculation. Individuals that are imprisoned in the long term are not in the labor force. Students who are electing not to work, instead study, also not included in the labor force. Stay-at-home moms and dads, or for that matter, anybody in the family that stays at home, is someone who is electing to not be included in the labor force. Also, people serving in the military excluded from the labor force. But it's the final two bullet points I want you to consider, because these are the two that are confused, and I think I'm going to set this record straight right now. The first subset is discouraged workers. So if somebody considers themselves as employable but is just not looking for work, maybe because they think they can't find it, they're a discouraged worker and they're removed from the labor force. Also, if you're retired, anyone over 16 that is retired is also excluded from the labor force. So let's go back to this chart here and look on the left-hand side. This chart I just showed you, which was the civilian labor force participation rate, is based on the labor force, the 161 million, divided by the number of people over age 16. Right now, that's currently 63%, and it's on the low end of the historic range. Let's stay with this chart for a second so that we can look at the unemployment side of the picture. So at the very, very bottom of the triangle, you have UE, that stands for unemployed. Right now, that's about 6.58 million people in the United States. These people are defined as indicated by the arrow. These are people who want a job, that are part of the labor force, but can't get a job. So when you take that 6.58 million people who want a job but can't get it, and divide it into the labor force, not the people over age 16, not the total population, but the civilian labor force, that rate is currently 4.1%. So again, the argument comes back to whether the labor force at 161 million people is representative of the people that are truly able, willing, and desirous of a job, by virtue of the fact that there are groups that are being excluded, one of which is discouraged workers. So basically the argument says that the economy is just so bad and things have been so difficult in the United States since the Great Recession that people have dropped out of the labor force voluntarily, and therefore that overstates the amount of employed and therefore understates the unemployment rate. But then you look at this chart, and this is a chart that the Bureau of Labor Statistics tracks. And this is based on the same surveys that they use to come up with the employment numbers. And these are persons not in the labor force who want a job. We can also consider them the discouraged workers. And what you'll see is that while that number did rise, and this chart's reflected in thousands, so basically we're looking at a chart that ranges from 0 to 8 million. From lows of around 4.5 million people not in the labor force who want a job but aren't considered as part of the labor force, both around the year 2000 and then just prior to the crisis in 2008, that number did come up to about 7 million, but it's back down to about 5 million. So what does that mean? It means that the discouraged worker count today is probably no more than about 500,000 people higher than at the best time of any time in the last 20 to 30 years. So what does that mean? That means that if you added all those 500,000 people back into the labor force count, the unemployment rate only goes from about 4.1% to about 4.3, maybe 4.4%. The real explanation for the drop in the civilian labor force participation rate is retirees. We have more people independently wealthy right now than at any time in our country's history. More people in their 40s, 50s, 60s, and 70s and 80s that are retired, who are electively not part of the labor force. So the bottom line here is that the 4.1% unemployment rate, whether it's 4.1, 3.8, or 4.3, doesn't matter. It all says the same thing. Employment is tight in the United States. That's inflationary. That's why bond rates are coming up. But it's a sign of a strong economy. So put that in your hat, take it to the next cocktail party, and next time somebody tells you the unemployment rate's not real because there's too many people that don't want to find a job, share with them this video. Hey, I'm Bill Valentine. Thanks so much for tuning in. I'll see you back here next month.